This is Bloomberg Crypto, a daily Bloomberg iHeart podcast, and I'm Stacey Marie Ishmael, managing editor of crypto for Bloomberg News. It's Thursday, February 9th. One of the more interesting phrases used by folks in crypto is this one: code is law. Think of it this way. Under the idea that code is law, what governs whether something, say a transaction, is valid or not isn't the whims or caprices of any individual, regulator, or government. Instead, what determines whether something is acceptable, permissible, or appropriate is what's written into the software that enabled that transaction in the first place. It's another way of thinking about the so-called immutability of the blockchain. If the blockchain says it, then that's what's going to be true. That's what's going to remain. Sounds logical, right? But what happens when the code doesn't do what you're expecting it to do? Or when someone, or some party, exploits loopholes in the logic of that software for their own personal financial gain? That's what we're going to talk about today. The interesting precedent set by a crypto trader named Avraham Eisenberg, who exploited the idea of Codys Law for millions of dollars, and then was arrested and charged with fraud. Joining me now to break down what the latest charges mean is Bloomberg reporter Muyao Shen and Bloomberg law correspondent Matthew Boltman. Matthew, Muyao. Welcome back to the show, Muyao. Welcome to the show, Matthew. So, Muyao, I want to start with you. We have talked about this idea of Codys Law. We've actually had folks on the show previously talking about this Mango Markets hack. But what's been happening recently? Why does this continue to be a big deal, as it were, for players in crypto?
I think let's just step back on what happened. As we all know, that Eisenberg was sort of involved in several, I think, criminal complaints right now, both SEC as well as, I think, the prosecutors in New York has sort of sued him for several cases. And maybe we want to step back on what happened exactly and why it's important. The big part is that Eisenberg sort of was sued for using two Mango Markets accounts that he controlled to manipulate the prices of Mango perpetual swaps, which are features that allow traders to keep their positions open. And what is the Mango Market? It is a lending project that's based on Solana blockchain that allows people to post certain tokens. In this example, you can post Mango tokens, which is a native token of Mango Markets, to borrow other type of tokens, for example, stable coins and things like that.
Now, what are some of the particular crypto issues that are at play here? Like, how has this been playing with folks in decentralized finance or DeFi? Because we're going to get into some of the more legal arguments very shortly.
For me, covering Mango Markets hack, the biggest interesting part is that Eisenberg, despite what he claimed himself everything did in the past was like he was just following the code that was designed to supposedly how it works, that he has received very little support from DeFi community in general. And DeFi community, as we know, they sort of have this belief in code is law ethos, which is a belief that authority in crypto is the pieces of a code that underlies all the projects. However, the code is designed and people were just following it.
Matthew, how do regulators feel about this idea that someone can allegedly exploit a protocol, a marketplace for, tens of millions of dollars and then say, well, this is just what your software allowed me to do?
The law enforcement and the regulators would disagree. I think that is maybe one of the big takeaways from kind of the legal action that has come of this, is that if they view an action as being fraudulent or market manipulation, they are going to aggressively pursue that behavior.
What about this action is being viewed as potentially fraudulent or a manipulation of markets? And who are the players involved?
So there are a few at this point. The Department of Justice has brought a case alleging wire fraud, commodities fraud, and commodities manipulation. The Commodity Future and Trading Commission has brought its own case, and the Securities and Exchange Commission late last month brought a case alleging securities fraud against Mr. Eisenberg.
That's a lot of people and a lot of allegations. Why are there so many players here?
I mean, from the DOJ's perspective, those are criminal charges. And then you have the CFTC and the SEC are these regulatory agencies. Those are civil complaints where they could, in theory, recoup some of the allegedly ill-gotten gains from this alleged scheme. Their theory of the case is all pretty similar, that the idea is he artificially propped up the price of the Mango token, increasing the price of these Mango perpetual futures, and ultimately walked away with somewhere in the neighborhood of $50 million when all was said and done.
And it sounds to me like there's this interesting, I don't want to use the word tension necessarily, but there's this interesting distinction between like the crypto perspective on this, as Muyao is describing it, which is, these contracts for this particular protocol were set up in a way that allowed what Eisenberg to be done. And the regulators are coming in and are like, sure, but the spirit of the actual laws at play here would scream that this looks to be something closer to fraud and market manipulation. How have regulators, in your experience, had to deal with sort of translating some of these crypto native concepts into policy, legislation, law enforcement?
I think from the DOJ's perspective, they describe this as the DeFi finance platforms. This is a new frontier of old school financial crimes. I think from their perspective, if you did the types of actions that he is accused of doing in a traditional market, that is going to be market manipulation, and it wouldn't be a whole lot of debate, I don't think, about, from the DOJ's perspective, and that they pursue charges. I think for them, it's simply a matter of the same type of conduct in a new platform. From their perspective, it's quite similar.
Now, Muyao, while we may have said at the beginning that, like this idea of Codys Law is very widespread, a lot of people believe in it, the actual reaction to what happened to Mango markets was far from unanimous, right? You definitely had people who were like, nope, this is not acceptable and we can't keep allowing things in DeFi to go this way. In addition to, of course, Eisenberg himself, who at the time was like, well, this is what I was able to do. So how do you, as someone reporting on this, attempt to reconcile these differing perspectives?
I thought it was very interesting previously when there's any sort of charges from regulators or prosecutors on DeFi-related behaviors, we often see sort of resistance from the community and, as, again, Codys Law, and they believe that this is out of the regulation, out of regulators sort of like field. I think today, given what happened in the past year in 2022, which not exactly the most beautiful year for crypto in general, we saw all kinds of frauds happening. And I think crypto in general is quite humbled from all the experience in 2022, and they realize that it is almost sort of like naive to think today that crypto is outside the law, and people are actually hoping there's more clarifications from regulators on what it should be, what's legal and what's illegal and things like that. And I think in this case specifically, given Eisenberg's own personality and how he sort of like bragged about all his highly profitable trades in the past, people are very happy about that, the prosecutors are going after him and showing kind of example that they also make a distinguish between what he was doing versus, Codys Law, because I think a lot of DeFi advocates, his behavior isn't like a reflection of Codys Law in crypto, and what he's trying to do is code is above law, which is different.
Muyao, I've asked you this question before, but is there really a middle ground? Like, is it possible to have DeFi with TradFi characteristics? Or, Matthew, is it possible to have different types of banking with some of the, perceived innovations of crypto? Or are we always going to be talking about two totally different languages and the people who just look at each other like they're both aliens on either side of this?
From covering DeFi itself, the trend I'm seeing today is that I think DeFi is getting more and more sort of similar to traditional finance. I think a good point is that a lot of people are talking about so-called permissioned DeFi, which is the DeFi projects that's whitelisting certain players into participating projects, while after they went through such as AML and other different rules before they can do that. So I think at this point, first of all, we are in a bear market that we are far away from the old DeFi summer when there was a lot of interest, a lot of retail interest, a lot of money in the space. And right now they have little interest in the space in general, and people are looking for real innovations, also called real yields, real returns in the space, other than just a bunch of random tokens and posting sort of fun or unrealistic high numbers out there. But in order to bring real, I think, returns or yields into DeFi, you have to have sort of regulatory framework around it for, I think, institutions to participate. I think DeFi people, as I mentioned earlier, they're really humbled by the experience in 2022, and they're sort of more proactively engaging, I think, regulators, not just in the US, I think around the globe, because, after all, crypto is global. Even there's might be a little bit slowdown in the US in terms having a regulatory framework around how to do DeFi. But I think in other parts of the world too, I saw DeFi people, they're talking to a lot of regulators around the world about how they can sort of encouraging an environment that can allow more banks, allowing more investment banks as well to get into the space.
Up next, more from Bloomberg reporter Muyao Shen and Bloomberg law correspondent Matthew Boltman. We'll be right back. How are you seeing regulators approach this question of whether traditional finance should take on any DeFi characteristics?
I think one of the interesting things from this complaint in particular is the SEC's view that the governance of the Mango markets actually was not decentralized, that the power was concentrated in the hands of a limited number of individuals. And it's not the first complaint that we've seen along those lines. I'm thinking of another CFTC case, but at least some of these projects that these regulators are pursuing, in their view, they're kind of decorated in this new technology, but a lot of it is, from their perspective, traditional fraud. And it cloaks itself as decentralized, but actually the power is kind of concentrated.
So I'm hearing two very interesting things from you that I want to make sure to kind of reiterate and emphasize. The first is you're saying that from the SEC's perspective, from the US regulatory perspective, this thing that presents itself as, we are DeFi, we are decentralized. From the SEC's perspective, they're you look very much like these other kinds of entities that we continue to be centralized. The ways that you make decisions are concentrated in the hands of a few people. And the services or the products that you're offering also look like things that we would traditionally have remit over. Is that correct, as the first part?
This
Mango markets?
With respect to the Mango markets, absolutely. With respect to this particular project, yes. One of the things that they had talked about, the Mango token, which is kind of the central token that's involved in this alleged scheme, there were governance rights attached to that token, which in theory would give countless people a say in how the project is run. The SEC, in its complaint, called those governance rights illusory and said, really, the power was concentrated in the creators of the Mango market.
Got it. And Muyao, if I could just put the second piece to you, that's very different from how the folks in DeFi are positioning themselves, right? So even with this idea of permissioned or, things that are subject to a higher bar, their argument is still, we couldn't be more different from the banks. We couldn't be more different from these traditional securities and lending providers.
Yeah, I think I would agree with that based on everyone I talked to in the past few weeks. It's just like, I think an easy example is if you're creating a DAO, which is a decentralized autonomous organization, which I think is like DeFi's way of a traditional corporate entity. It sounds like, this is like nothing like a corporate and, it shouldn't be regulated. But as long as you have a group of people who are making money in this case, that you do need to set up a bank account. Where exactly you're going to set the bank account, if it's onshore in the US or offshore somewhere else, wherever it is, it has an entity, it has some sort of like regulations like being involved. And what I'm seeing today is that if you're a DeFi project that do not have a lawyer, that you're definitely constantly looking for a lawyer or any sort of legal service around how you should manage your protocol or how you should organize your DAO today, which I think will be the trend for 2023.
Yeah, if there's one thing we can take away from a lot of these episodes is that no matter what, the lawyers will make money. So on that note, thank you, Muyao, and thank you very much, Matthew. It's been a pleasure having you both on the show.
Thank you.
That was Bloomberg reporter Muyao Shen and Bloomberg Law correspondent Matthew Boltman. You can find more of their reporting on the Bloomberg Terminal and on Bloomberg.com and Bloomberg Law. For more, be sure to check out our twice-weekly newsletter, Bloomberg Crypto. This is Bloomberg Crypto, a daily podcast from Bloomberg and iHeartRadio. For more shows from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts. Send us your comments, questions, or suggestions for the show to crypto@bloomberg.net. The supervising producer of Bloomberg Crypto is Vicki Vergolina. Our senior producer is Janet Babin. Our producers are Mohammed Farouk and Sharon Beriro. Our associate producers are Ty Butler and Moses Andam. Desta Wondirad is our engineer. Original music by Leo Sidran. I'm Stacey Marie Ishmael. We'll be back tomorrow.